everyone, this is Dave. Thank you for tuning into the channel as always. Today it is well past time we talk about a stock that has gone on an absolutely amazing run, a space stock that has gone from around $2.3 per share all the way to $19-ish per share. That is an 8x, and even more astonishingly, it's done it in less than 3 months. I am, of course, talking about AST SpaceMobile. So why has the stock run up so massively? Is it a good buy here? Is it going to run up further? Is the company going to make it? What is going on with this space stock, and why don't I already hold it? Well, let's talk about all that in 1 second. First though, if you haven't already subscribed, I hope you'll consider doing that by the end of this video if you do find it informative and interesting. And if you already are a subscriber, thank you so much. And you can always help out with those thumbs ups or comments on the video to help out with the algorithm. Okay, with that out of the way, let's dive into the meteoric rise of AST SpaceMobile. Now, I have made a couple videos about this company before, so I'm not going to do a deep dive on what they do, how the business works, what their satellites are. I'm just going to be very brief and say, if you're not familiar with it, that they are the space stock that does direct mobile to satellite internet service. There is another company called Link, which is working on a similar service, but that is not publicly traded to my knowledge. And of course, SpaceX did start off with direct satellite to dish technology, which they still do and do very well, but they're starting to pivot now towards direct to mobile technology, and they've released some test results and things of that nature showing some connectivity from a cellular device directly to a newer generation Starlink satellite. AST though has been working on direct to mobile from the beginning, and that has been their whole game plan since they got off the ground. So first of all, the reason why this stock has been on my radar for quite a while and I've never invested in it is simple. They're not yet a revenue generating company, and usually when I look at companies, I like to see that revenue growing steadily as a company gets closer and closer to profitability. AST's structure looks a bit differently though. They have launched their first Blue Walker test satellite to orbit. It's been in orbit for quite a while. It was able to facilitate calls directly from mobile phones connecting to the satellite. It was able to provide 4G data connectivity directly to smartphones, and just recently they announced they were able to provide 5G connectivity directly to unmodified smartphones. So the capabilities are impressive. What differentiates them from SpaceX, at least in my mind, is that these are absolutely massive satellites, which makes a lot of sense to me when you think about communicating directly with a cell phone as opposed to a dish on the ground, say like an original Starlink or an old school satellite television connection, because you need that massive antenna, massive array in order to communicate with something as small as a smartphone and pick up those signals. So that's kind of where I see their advantage as lying right now over a Starlink. They are also further along improving those direct-to-cell capabilities than Starlink in terms of reliably transmitting data at higher speeds. So they do have very interesting technology, but the revenues have not started yet. So the next question becomes, well, when are those revenues going to start? And we actually got an announcement just recently, probably has a lot to do with the recent run-up in AST stock, that their first 5 production satellites are ready to ship, and they're planning to be launched on a Falcon 9 in September. So that'll be an extremely exciting milestone for the company to have their first 5 production satellites hopefully starting to generate revenue once they get into orbit. Some other announcements that recently caused the stock to run up included its strategic investments from Google and AT&T and Vodafone, which really does provide a show of confidence from those companies working with ASTS. They also did have a capital raise recently of $100 million, which caused some shareholder dilution, but allowed them to raise additional capital. Although I wonder if they're regretting that a little bit now that the stock price has run up so much. They could have had much less dilution if they raised capital at these levels as opposed to those previously lower levels. They were also awarded a contract with the US government to provide connectivity for an undisclosed amount. That was also a nicer contract for them in early February. And they also do have a $100 million commitment from Verizon to help provide 100% geographical coverage of the United States on the premium 850 megahertz spectrum. Now, one thing I really do like about this company, I have to admit, is how it's structured, because I think if they were to try and go direct to market, direct to customers themselves, and try to sell this satellite-based direct-to-phone internet to everyday people like you and me, it would be very difficult. But that's not the approach they're taking. Instead, what ASTS is doing is they've put all these strategic agreements and memorandums of understanding in place with mobile network operators all across the world. We already heard about Verizon, AT&T, all across the world. Various different companies operating mobile networks have made agreements with ASTS, which means that, say I'm on AT&T, I get to an area that has no coverage, I can just get a text saying, hey, you're heading into an area with no coverage. Do you want to pay an extra $10 for satellite-based internet per day or something like that while you're out there? I don't know exactly what the structure will be or if it's a pay per gigabyte type thing, but you can like opt in or opt out as needed, which is really great for safety and kind of changes the game on all that kind of thing, as well as just means that ASTS doesn't really have to worry about the marketing, the customer acquisition, or anything like that as much, because they're making these deals directly with the operators. The other thing is having these operators like a Verizon invest in the company means that they have skin in the game and they will want ASTS to succeed as well, because they will be, small owners in the company. Obviously, they will have an incentive to see that company succeed and see their investment grow. So that's the good stuff. I can definitely see why people get excited about this company. There's actually a pretty vibrant ASTS investor community as well out there. People who believe in this company as strongly as some of us believes in Rocket Lab have been investing for quite a while. So to you guys, I just have to say congratulations on your recent return over the past couple months. I had concerns about the financial situation of the company, but you guys stuck it out and you were rewarded. So congratulations if you have been holding those shares since the twos. Speaking of their financial situation though, let's take a look at what the financial situation for the company was just a few months ago and why it may have dropped all the way down to the $2-ish per share range. So taking a quick look at the balance sheet here on an annual basis, we can see that back in 2020, at the end of the year, they had about $42 million in the bank. Not a ton of money if you're planning to go up against the likes of a SpaceX. Although after going public and raising that capital, they did have about $321 million. To be honest, I'd still have liked to see a bit more than that in the bank as they develop their satellites, launch that test satellite. Building out a constellation of satellites is, of course, not cheap. That means they continually spend money and burn that cash balance. They dropped from 2021 to 2022 down to $238 million, so almost $100 million cash burned. Then once again, from towards the end of 2023, they dropped down to $85 million in cash and cash equivalents. Now, this is the point when people start to get nervous, when the company is running out of money and they're not earning anything yet. So switching over to a quarterly view, what's happened over the past year or so. Now we can see just one quarter later at the end of Q1, the total cash did jump up to $209 million. This was because, among other things, of that dilutive event where they issued new shares. I mean, extremely necessary for the company, but also can be painful for investors. At least they have a little bit more cash in the bank now. And then, of course, looking at the income statements, as I said, not really a lot of revenues there right now. We even had zero in 2023 because they weren't really ready to commercialize their product as of yet. So very difficult to invest in a company that's not yet bringing in any revenue. Not something I'm used to be honest with you guys, and certainly not for the faint of heart. Ironically, though, I do feel like this run-up in the stock price is the thing that really is now making the company more safe. Because when you have a valuation down in the gutter, it's almost impossible to raise money. The dilution will be incredibly extreme. The reaction of shareholders will be very poor. It's just very difficult. But now, with a share price up at 19 and a valuation of north of $5 billion, gives you an extra security blanket that, yes, they can raise more money. And to be honest with you, at these levels, I would like to see them raise a substantial amount of cash. that would just make me feel very safe about the situation the company is in financially in case it takes a little longer to get that cash flowing on and become profitable. I would really just love to see them take advantage of this run up and secure their future by adding some more cash to the balance sheet. The dilution should be much less than it was down at, say, below $5. And I think the security would just go a long way. When I think about a company like Astra, which also had a massive run up and then eventually they ran out of money, I kind of wonder what the situation would have been like if they just said, screw it, we're raising $1 billion or something insane when the stock price was so high. They could have had an extra couple years of runway to get their rockets sorted out. So yeah, I kind of do hope that AST raises here, and I would probably be more inclined to invest in them after they do have a capital raise and have a more cushy balance sheet that can make me feel a little bit more secure. So now I'd like to show with you a pretty amazing research report shared by finance blog called Kook Report. I believe this is compiled from research across the entire AST investor community online, Reddit, Twitter, all that kind of things. A lot of it probably done by the maker of this blog himself, and I have been told that I have permission to share this with you. So I just want to be clear, I didn't make this myself. Check out the website yourself if you'd like to. And I don't claim to be an expert on AST. I'm simply trying to learn about the company and taking you guys along for the ride. So let's see what we can learn from the Kook report together. It's an extremely thorough report. Now, this is actually 179 pages, and as I said, I don't think I've ever seen a retail investor-generated report that's this thorough or long. Obviously, I'm not going to go through every single page with you guys, but I just figured I'd share some highlights that jump out to me that can maybe generate a bit of discussion. So just a bit of financial information here, breaking out SG&A, engineering, R&D costs, and showing some of the revenues that are projected for the company. In 2024, they're projecting something like $9 million, pretty negligible, almost nothing. But according to this report, we're looking at $125 million in 2025, and then $813 million in 2026. That is an absolutely massive increase. And I do want to dive down into more detail on how these numbers were landed on, because going from having negative 42 million EBITDA in 2025 to positive 564 million. That would be quite a run. That would be extremely impressive. The other thing I just figured I'd point out, shares outstanding. I would expect this to increase year over year. When I model my Rocket Lab shares, I just increase them by a certain percentage point every year, because generally you have stock-based compensation for executives and important people within the company. You can have dilutive events for adding new capital and stuff like that. So I would like to see this number increase slightly, at least over time, although I don't know, maybe they're not actually providing any stock-based comp for their executives. Now, I do want to point out they don't have enough cash on their balance sheet to fund their Block 2 constellation. I want to make that very clear. So the money does have to come from somewhere, whether it's hopefully coming from more mobile network operators investing in the company or dilution events or otherwise. That will remain to be seen. And I do think this is kind of what was weighing on the stock the most, just the financing uncertainties around this next gen. Of course, yeah, concerns around SpaceX continue. The thing about SpaceX is they have almost limitless capital at their disposal, so very hard to compete with a company that can raise money at will, deploy as many satellites as they want. That can be pretty tough, I have to say. A similar challenge to what Rocket Lab faces going up against the Falcon 9 and eventually maybe Starship as well. So if you assume a cost of $2 per gigabyte, which is fairly conservative for areas that don't have very good cell coverage, the revenue potential would be between $1.5 billion and $3 billion per year on 100 satellites, or $3 billion to $6 billion per year on 200 satellites. Probably also worth sharing with you some of the agreements they have signed with mobile network operators. So they have strategic investors from Vodafone, Bell, Samsung Next, Rakuten. These I feel like are very important. It would be great if they had some more investors over here, like some of these names, if they were actually investors as opposed to MNO partners. Partners, I think they've basically signed an agreement that once ASTS is up and running, they will sell to their customers through their network. And just comparing to SpaceX and Link, which is another similar company, AST, looks like it has deals with operators who provide by far the most amount of potential customers, at least. So if you're looking at number of customers worldwide, we're looking at like 2.7 billion, if I'm reading this right. Going over the CapEx per satellite in terms of the financials of each individual satellite, what they're saying here is that based on $5 per gigabyte, which is interesting because I thought we were looking at $2 per 4. They're saying that each satellite can pay back its capital development costs in 3 years and change, at which point it'd be all profit after that. Now, hopefully their next generation Block 2 Bluebird satellites will have improved economics and capabilities. So as I said previously, they have had strategic investments from AT&T, Google, and Vodafone, which I do quite like. I just hope that there'll be more of these deals, because one thing is absolutely certain: AST will need a lot more money in the future to build out their constellation. Looking at their current launch of a Falcon 9, I believe they're paying for the entire rocket, which is something like $65 million, I believe, these days. And that's just for 5 satellite launches. So if you think about, say, 100 satellites, things start to get a little bit expensive. Now, in terms of funding sources, from what I'm reading here, the U.S. has a program called Rural America, which I guess tries to help provide coverage to areas without coverage, and hopefully that could help fund AST, something I really need to look more in depth if I were to consider an investment. But the biggest question marks for me continue to be around financing. So thank you for everyone who worked on this report, sharing it with us and giving us their research and insights on AST. I see a friend of the author, Steve Larison, apparently worked on it a lot and ended up passing away in 2023. Sorry to hear about that. There is a lot more to this report if you want to dig into it yourself on Kook Report website. My biggest concern around this company remains the financing situation. Just to talk about how expensive building out this constellation could be. For launch alone, not the manufacturing and putting together of all these satellites, if we're talking about 100 Bluebirds, and eventually 200, but let's start with 100. This first launch is delivering 5 Bluebirds on a Falcon 9 rocket. Falcon 9 rockets go for about $62 to $65 million right now, assuming they're filling that themselves. I don't have confirmation on that, but it sounds most likely that they're buying the whole rocket. So they're paying 60-ish plus million dollars for 5 satellites to be placed in orbit. That means they would need 20 launches to build out their full constellation. 20 times $62 million. 20 times $62 million is $1.2 billion. Not chump change at all. And, with a company having $200 million on the balance sheet right now, it raises some questions. It is possible they could fit more of these satellites on a Falcon 9 than 5, and they just have 5 right now to go up. So maybe they could squeeze on some more, and then we're looking at less launches. But I feel like we're probably still looking at $1 billion in launch costs. If anyone has more detail on that, do share down in the comments below. But just a massive amount of money in launch, not even talking about building out those remaining satellites. So where do we sit with AST today? It's a tough one. I am still working on researching it fully. I'm not going to lie. I'm not going to claim I'm an expert on it. But what I like to do is share my research with you guys if you're interested while I do it, so that we can all get the most out of it possible. What is certain is they will need more money in order to build out their constellation. I would like to have a better understanding of where that money comes from before I would consider investing. I'm not saying there's no plan in place for them to get it. I'm sure there's various ideas in the works. I would like to see them raise capital here. Maybe that's controversial, but I just feel like when you have an 8x, you don't know how long it's going to last at these levels when you're a company that's not yet profitable. So why not take advantage of that, raise a bunch of cash, de-risk the company, and then you don't have to worry quite so much about trying to find funding from these mobile network operators or rural America or any of these other funding sources, which I still do hope come through. The total addressable market is absolutely massive. We're talking about everyone who has a phone and might want to use the internet on the phone when they go out of areas with normal coverage. So massive potential in terms of revenue numbers, still a lot of risk because the constellation is not yet in orbit operating successfully. They have the first 5 satellites built, and we're talking about 100 satellites, so that's still a long way to go. I would definitely put this in the high risk, high reward category. If you jumped in the 2s, the 5s, whatever, congratulations on your run. I'm never going to sit here and say the market is wrong about anything. I'll always say, okay, you guys saw something I didn't, because I have looked at this company previously. So there you go. I guess I missed something on this one. Congrats on your amazing run. I will continue to research AST in the future as I try to learn more about it. Definitely, I'm not yet at the stage where I consider making it an investment. I would love to see some revenue flowing in, hopefully from these first 5 satellites, and can get a better idea of the economics and see that it does actually play out as they say, see how much money they're getting per gigabyte, all this kind of thing. Really looking forward to those 5 satellites launching in, I believe, late September. Let me know down in the comments below, are you an AST investor? Where do you expect the stock price to go in 5+, 10+ years? Are you worried about the capital situation? And how have your gains been over the last 3 months? Interested to hear how your thoughts are down below, whether the company's kind of gotten ahead of itself here or if this run is absolutely justified. And I'll be sure to check out what you think. Thank you guys for watching. I'm sure I'll be making future videos on AST soon. Let me know if you have any more resources or interesting information about them as I continue that research. Please do subscribe if you haven't already, and I hope you have a great day as well as a great weekend. I will see you in the next video. Bye for now.